All right. No catching on sleep here. It's that time of day again here, folks. It's time to get back to work. It's that time of day again. It's Monday evening. It's March the 11th, 2019. My name is Joseph. And of course, this is your nightly newsletter. You know, I help new traders earn consistent, reliable, dependable, predictable profits using a very simple 3-step trading strategy that we teach and trade together every morning in our trade room. But my job tonight, though, is to make sure we identify the best of the best opportunities setting up for tomorrow, Tuesday morning's trading session. And we're going to cover crude oil, S&P, Nasdaq, gold, and we'll wrap up tonight on that mighty euro. But my job first, I'm going to dig into that oil market here first tonight because oil is giving us some really great clues on the chart. First things first clue is nice strong bull momentum here. With that bull momentum, we go into a trading range. Momentum tells me direction. Trading range tells me location. So now, of course, knowing that trading range is bullish, I want to find ways to buy right below the low of that trading range. My goal, of course, for tomorrow, knowing this information, is to look for buying opportunities down below that low. But I'll tell you what, we also have a very big market objective waiting overhead at 57.81. And I have a couple different options here of how we can trade a breakout going up to that buyer's objective. So bull market into a trading range. I want to be a buyer below the range, but I'm prepared to buy above the range with the right pattern. We're going to grab into those patterns in just a few moments. Over here on the S&P here tonight, the S&P is bullish with a capital B right now. You can see, right, bullish, bullish, bullish. There were headlines in the overnight session about a new stimulus package in China. They keep printing more money in Asia right now to make the woes go away. And that, of course, was obviously seen, right, as a very good thing for the U.S. markets this morning. Now, of course, with the very strong bullish momentum right now, anytime I see this much move in one direction in one session, we usually see one of two scenarios following the following day. One of those scenarios is probably going to be a trading range. So I'm keeping an eye out for a trading range, and if I can get that trading range, I'd like to see a nice deep pullback, a failure, and then an opportunity to buy with that big objective going up to that big round number. So I'm keeping an eye out for a trading range, but obviously you can see that channel we've got drawn in, and that spike in channel gives me the battle zone, and we're looking for those pullbacks as well. I got a bunch of different options we're going to go over on the S&P. Now, of course, over the NASDAQ is also, that's the gold, the NASDAQ is also, of course, in a very similar position. Right? Here we are now on the NASDAQ, looks almost identical to the S&P chart, strong move up into a spike in channel. Now that spike in channel gives me a very well-defined area where I'd like to get long tomorrow morning. Remember, there's two different types of scenarios, though, we usually see when a market moves this far, this fast in one session. Another pattern I'm looking for is called a flag pattern. I'm watching for this now to turn lower here with a bear channel. I wouldn't be ready to. I wouldn't say sell this market just yet. So don't take too much right of that bear channel to heart, but look for it now to break up and over for a nice buy from there. I'm watching that potential flag pattern here on the Nasdaq here for tomorrow. The big problem though with that Nasdaq is, and the one thing that's different than the S&P is we are sitting right there on a major level of support of resistance. I'm going to talk more about that here as we go through the rest of the session here this afternoon. So stay tuned on that for more. Over on the gold here, I give you a bit of a glimpse there earlier on the gold. Gold, of course, is obviously bearish. We have a strong move down here on gold. Much like oil, though, they finished the session going sideways here, right? Double tops at the bottoms there. And, of course, that tells me we have a trading range. Once I know we have a trading range, I now know I want to sell up around those highs. I want to sell up around the highs of those trading ranges. And to do that, I've got a couple different areas I'm watching, such as the range expansion and, of course, that hidden channel area. So I'm watching for a sell up in that battle zone. I'm going to talk more about some sell entries looking for in just a moment. I've got to be honest with you, though, I'm also keeping my eyes open for a possible buy, because just like on the E-minis, how I mentioned a flag pattern, this could easily be a flag zigzag pattern. Very slow down. We may easily see this market back up to retest that big round number. And I'll put the plan together for how I plan on buying this market, right, as well as being a seller. So boy, oh boy, we have a lot to cover here tonight on that gold as well. But we're not done yet. We got one more market to look into here tonight. We got the euro on the chart tonight. Euro is bullish into that trading range. And much like we talked about on the oil market, the bullishness tells me to buy. The range tells me to buy below the range at support. Looking for buy setups right below that trading range. And of course, because this is the euro, we're coming off of that big round number at 12,000. I have a reason to believe that big round number at 13,000 is the next objective. I'm going to talk about how we can try to break out here as the market goes higher here if it doesn't want to give us the pullback that we're looking for. So I got really a bunch to cover here for you guys tonight. We got a possible pullback on the euro, possible reversal there on the gold. Nasdaq and the S&P were just perma bulls here today. So we got two scenarios we're watching for on there, right? And of course we got the crude oil here, right? Bullish into that trading range. We're going to break all of this plan down here in just a few moments here, guys. Before we do that, though, I want to make sure you never miss another great video here on our newsletter. And to do that, just make sure you join our mailing list. All I need is your name and your email address. Hit that subscribe now button, and then make sure you check your inbox. Because don't forget, I'm going to send you a welcome email, not only to verify your membership to our mailing list, but to also give you a bunch of goodies that'll help you get the most of our time together every evening on this nightly newsletter. So make sure, don't delay, join the mailing list. That way you never miss another great video here at School of Trade. And also, don't forget too, we'll be opening up our trade room tomorrow morning at 8 o'clock Eastern Time. I would love to see you there with me. If you can't be there with me, though, the next best thing is to grab all those charts from tonight's video. They're attached right below the video tonight on our blog. If you want to see the same charts that I'll be using tomorrow in our trade room, just scroll right down and you'll see all those charts listed below tonight's video. And then while you're down there, don't forget, if you're on YouTube, drop me a question in the comments section. If you have any questions, comments, feedback, any other video ideas you want to see me cover on this newsletter, that's what the comments section is for. So drop me a question there in the comments section. Give me some feedback. I'm always trying to make this a better place to learn and earn. And while you're down there, make sure you subscribe to our YouTube channel and hit that thumbs up button if you like the video so far here tonight. And then don't forget, if you want to call the office or you want to use live support, I've got toll-free phone numbers here for the office here. And of course, anytime you want to use that live support, I'm always here to answer all your questions. All right, we are looking great here. It is great to be back with you guys and gals. Let's jump in and take a look at the schedule for tomorrow. Tomorrow's Tuesday, March the 12th. What do we have here on the schedule? Well, first of all, taking a quick bird's eye view of this week of action, I want to remind you we are going into the third Friday of the month. The first day of the month was a Friday, which means the 15th is quadruple witching. You'll notice that listed on most economic calendars. Now, we are not stock traders in our trade room. We trade futures for many different reasons, which you can learn more about in our beginner classes. So this won't have that big of an impact until end of the week. As we get into Thursday or Friday, we start seeing volatility pick up as all four asset classes start to expire on the same day. This happens four times a year at the end of each quarter. March, right? April, May, June, September, right? Of course, and December. So every quarter, right? March, June, September, and December. This one, of course, being, right, the first one of the year in the month of March. It's not going to impact us too much tomorrow or Wednesday for that matter, but Thursday and Friday, we definitely want to be aware of, right? That quad witching will start to kick in. We'll talk more about that as we get later on in the week. Major news here for tomorrow. We got CPI at 8:30 on Wednesday, and of course 10 o'clock on Thursday, 9:15 on Friday. Those are the big blocks of news here this week. You'll notice most of them, though, are either before or just after that NYSE open. So get to the markets early this week because we definitely have all the big news stacked early. So tomorrow morning, we open up our trade room, 8 o'clock Eastern time. We're going to have a front row seat for that big news, that consumer prices number at 8:30 Eastern time. And which markets do you think are going to react the most to that CPI number? Well, CPI means inflation. It means money supply. Money supply means inflation. Inflation means currencies, and it means gold. So taking a quick look here at gold and the euro tonight, right, because those are likely going to be the big movers tomorrow around that CPI number. We're also, of course, listening in right now to hear any more news about that stimulus package in China, right? That's the same thing that sent those markets rallying higher here. So we are definitely keeping our eyes open to hear more about that, right, as we go into the end of the week, and I'll keep you guys posted, right, as we go. So a relatively uneventful week here this week, right, compared to what we've seen the last couple of weeks here at the beginning of this month. CPI number tomorrow morning. We'll keep our eyes and ears open for that commentary from China tomorrow. And then, of course, we'll play it by ear as we go through the rest of this week for the quadruple witching. All right, let's jump right in here. We got a lot to cover here tonight, and I want to make sure I get you guys out of here at an early hour here this evening. Always great to be here with you guys and gals on this nightly newsletter. Let's jump into oil here first. There are three big clues on this oil market. The first thing I always do, though, is I always ask myself, what are the market conditions that we're dealing with right now? Is this a range-bound market or is this a trending market? And you can see right away, this is a range-bound market. How do I know? Double tops, double bottoms, flat moving average. It's a range-bound market. Once I know we have a range-bound market, now I ask myself, is there any directional bias before that range? And the answer is yes. The market was bullish before that range. Since the market has a bullish bias, I now know I want to buy, and I'm going to buy at support. Now, where could I find some support levels below the range or even above the range? Let's talk about that, for example. I have my trading range. I take that trading range now. The size of that range can be copied and pasted down, and I can use that to create major support right around that 56 big round number. At the same time, guys, I can do the same thing. I can take that trading range, I can copy and paste it up, and I can find a level of resistance up there. So I know I have a bull market. I know we're into a trading range. I know that trading range tells me I have a level of support waiting down here right around that $56 a barrel. I also have that level of resistance waiting overhead. Now, what else does a range tell me? A range tells me to buy low, sell high, and avoid the middle. Buy low, sell high, avoid the middle, right? Buy low, sell high, and avoid the middle of that trading range. So now we've got a pretty good idea of what we want to do. I know we're bullish. I know I want to stay away from the high and stay away from the middle, so I want to get that pullback, right? I want to buy that pullback. That's the most reliable way to trade this. Now, what would those patterns look like? How could I be a buyer on this market as we go lower? And then also, too, right, what about if we went higher? Could I buy if the market goes higher here? I can, but I have to be very careful here right now because you'll notice we have a big, big high up here, right, all the way back up at those range highs right before that $58 a barrel, right? These are major, major tops here, right, from earlier on this year. So major, major tops up around that $58 a barrel. The reason why that's important is because, yes, I can definitely look for a way to go higher here, but I don't want to buy into that major level of resistance. Does that sound like a plan, right? Pretty good plan there? Okay, so we got to buy low. If it goes higher, though, we can buy. We just got to make sure we stay away from buying into that market objective. All right, let's dig in. How do we do this here then? Well, let's plan on buying the low first, right? If I can get a pullback here now, if I can get that pullback, that will put me into position. But normally, though, when the market pulls back, let's make it a little bit smaller here, right? Normally, when the market pulls back like this, normally you're going to see sellers try to sell off that pullback. And that's exactly what I'm hoping we get. Hopefully, we get that nice deep pullback off the high, get me into that area of support I mentioned earlier. At the same time, though, I don't want to try to buy that one yet because oftentimes the sellers will come right back in now and try to sell off that next pullback. That's exactly what we're looking for. Because once we get those sellers trying to sell off that pullback, now this gives me what I call the two-try failure pattern. The 1 and the 2. Once I see sellers trying once, then I see them trying twice. Well, now I know exactly where their stops are, right? Stops now are sitting right above those highs. And if I'm a seller and I get stopped out, what happens? I become a buyer. So a great spot to be a buyer here now is to buy right above those highs. One of my favorite entry patterns is what I call a two-try failure, right? Nice strong signal, and we're buying right into those stops. Now from there, I've got to be careful. I don't want to buy into the high of that trading range. Instead, what I want to do is I want to look to buy the pullback. This pullback almost always pulls back here for us right around the same spot we got in on the original. If we get the luxury of that pullback, that's another buying opportunity. So again, I'd like to see a pullback off of these highs, get down into that buy zone we mentioned earlier, get that one try, that two try, look to buy into those stops, and then if we can, get that pullback. Just make sure that pullback doesn't have you buying into the high of that trading range, right? We want to buy the low of that range, not the high of it. Now, we talk about the pullback pattern. That's pretty easy, right? The 1, the 2, the failure, the up, and the go. Relatively easy sequence that we see almost every day in our trade room. Now, what if we go higher here? We know we got to stay out of the middle, right? Stay out of the middle. What would the plan be if the market goes higher here without the pullback? What can we do there? Remember, I've got the objective overhead at 57.81, 57.80 area. That's where those buyers are trying to go. I also know I have a level of resistance up here at 42. So what's the plan then? Well, the first thing is I want to see a nice strong jump above that trading range. That sets the table now for sellers to try to sell down back into that range. What I'm looking for here now is I want to see a very specific entry pattern called a two-try failure, but now going in the opposite direction. I'm expecting now those sellers to try once, expecting them to try twice. Once I see those sellers trying once and twice, up around the high of this channel, up around the high of that range expansion, now I know the sellers are fully committed and I can buy right into their stops. So very much like the failure pattern we saw at the low, where we go one try, two try, back up. Now if we do blast higher here, let those sellers try once, let them try twice, and then we'll buy right on the way up to that market's objective. Now, another thing I want to keep in mind, again, staying out of the middle here, right? If we stay in the middle, stay away from the middle. What if it just jumps up here, right? What if this thing just takes off, right? What if it just takes off to the upside? If it takes off to the upside, find those swings and look for trap entries, right? Traps are one of my favorite entry patterns as well, especially when the market has a lot of personality to it. So if it really jumps, right, and really runs higher here, if it really runs, look for those trap patterns before you get up to the objective. If we run straight to the objective and we come in tomorrow, we may be going sideways here. We may find ourselves early tomorrow morning in a bull market in another trading range. If that's the case, look for that 1, that 2, that failure, and we'll buy below the range, just like we're trying to do the same thing right now. So keep your eyes open on that. The last thing I want to think about is what does a reversal look like? What would a market look like after it reverses? Well, you tell me. Look back in time here. Strong move down, and then what do we see? We see a 1, 2, 3. I call that pattern a 1, 2, 3 reversal. Now, what would it look like going lower here? A 1, 2, 3 reversal would go 1, strong move down, 2, a pullback to the moving average, and 3, a strong move off. Now, is that where I start selling? No. We want to sell at resistance. So what I'll do is I'll find that prior swing. I'm going to mark up that low. That's going to be used to create a hidden channel. And now we look to sell off the high of that hidden channel. Target, of course, is back down to retest that low at 54.52. So a very easy sell if we can get that trend reversal. But again, for right now though, stick to the buy side. And I've given you a lot of different types of entry patterns we can use to get long on this. Which reminds me, if you want to learn more of my favorite entry patterns, my failures, my traps, my pullbacks, and everything in between, check out that new free trading course in the upper right-hand corner. I'll also put a big red button for that course registration page right below the video tonight on the blog. So if you want to learn all the details of our 3-step strategy, if you want to learn all about the different patterns we use every day in our trade room, check out that free course in the upper right-hand corner. Pause the video. Not to worry, I'll be here when you come back, right? And we'll keep on going forward. All right, so oil's looking pretty good. We got that plan all ready to go. How about some S&P? Well, how about that S&P? S&P was a relatively uneventful day today, unless, of course, you're in the habit of buying high. There really wasn't much you could do. In fact, you could easily see, right, there is not a single pullback to that entire moving average the entire day. Now, again, like I mentioned earlier, the S&P was kind of riding on the rush of a fresh new stimulus package out of China. This, of course, is the 619 contract of the S&P 500. So the Emini markets were riding high on some brand new headlines for some stimulus in China. That obviously was met with quite bullishness here today. Anytime I see a strong move like this, in one day, the next day almost always goes sideways. The question I have right now is, do we go sideways at 2790 or do we end up going sideways up at that big round number at 2800? The big round number has been a pretty active area here. It's been pretty much support and resistance here all year. You'll notice if I look back in time here, right, you'll notice here that 2800 level has been bouncing back and forth here for quite some time. So I would assume that 2800 is where this market is trying to go right now. Maybe a measured move, but as of right now though, I would imagine that 2800 is definitely where these buyers are trying to go. So now that we know we have the direction, we're definitely bullish, we know kind of where the market wants to go. Is there anything else I can use on this chart that might tell me where I could look for the best entries? Because I know where the best exit is, right? I know the big round number is probably going to be the exit. So where's the entry going to be here for the S&P 500? Well, again, there are two basic clues here. One is going to be the trading range, which we don't see yet, but oftentimes when a market moves this far, this fast, it usually does end up going sideways. So if we do see a trading range, and again, I don't have enough information for it yet, I'm going to find that range expansion level and then look to buy off that range expansion. Now again, there isn't really enough information yet because there wasn't really anything besides a straight line going higher today. So in the overnight session, I'll be keeping my eyes open, right? Well, maybe not. I'll probably sleep and trying to catch up on that sleep, right, from the daylight savings time shift. But you know the drill, right? I'll be watching for a trading range, and if I see that trading range, I'm going to look to add that range expansion on and then buy off that range expansion. Now, another big clue, though, that's definitely worth mentioning here, and it's not the biggest of clues, but it's pretty much the only thing we have on this chart right now, and that is this little tiny spike in channel. It's very little. It's a cute little guy, as you can see there, right? Very small little spike in channel there. And so what does a spike in channel tell me? Spike in channels always tell me to look at that deep pullback. The deep pullback where? To the base of the channel. So see where that channel kind of intersects with the spike going higher here? We're in that 2773 area. Yeah, that's the base of that channel. So in most situations, a spike in channel will pull back, give us that nice deep pullback. That deep pullback will almost always result in a second attempt for the sellers, and then we can look for that buy now going back up, right, to retest the high, and again up to that big round number, right, 2800. Okay, so that's the plan here. One of those two scenarios is probably going to happen here tomorrow. Again, my only question right now is does it happen where we are right now, or do they keep going up to that big round number? Either way, I'm way too late in this move right now to be trying to buy high here. Even if you think this thing's going to keep running up to the 2800, you don't want to get in the habit of buying at resistance, or at least buying without buying at some level of support. So my goal, again, if we see a trading range here, if we see a market going sideways here, find that range expansion level, use that range expansion along with that 1-2 try, right? That 1-2 try failure pattern, and look to buy it right back up. Right. And again, as I mentioned earlier, in that free trading course in the upper right-hand corner, you can learn a lot more details about those 2-try failure patterns. What I really hope we get, though, is I hope we get that really deep pullback. If we get that deep pullback, again, down into the base of that channel, yeah, you'll also notice I added on kind of a hidden channel here. I'm not sure if we're going to get that or not, right, off that low. Maybe we get a chance to use that tomorrow. I just don't know how far this pullback will go because it's such a bull market right now. I would imagine any pullback here is going to be seen as a buying opportunity. So, maybe we get lucky and get a nice deep pullback on this. If we do get that really deep pullback here, again, those sellers are going to try to sell off that moving average. And when they do, that tells me now where their stops are. That will now allow me now to look for that seller failure setup. And if we can combine the battle zone into the low of this hidden channel, I mean, that would just be ideal, right? But we got a couple different options here, right, as we pull back. You've got that 2-try failure into that breakout pullback pattern. Okay, so really great patterns there. And again, if you want to see hundreds of examples of those patterns, just check out that free trading class I mentioned earlier, and that will give you access to our membership section as a free pass, and you'll be able to see hundreds of examples right from our trade room every morning. Now, that's the market pulls back. So now we kind of know what we're looking for here if we get the range-bound market or if the market pulls back here. What if it keeps going higher here? Well, the big problem is that there's not a lot of space, right? If we keep going higher here, there's not a lot of space up here. So I would say the only real viable option, if anything at all, is going to be a trap setup, which means you're going to want to see a 1, a 2, and a trap. So that will be your aggressive entry here, right? Let the bears try once, let the bears try twice, and because you've got that resistance level just right overhead, you want to look for that trap entry, right? Trap entries are always best when you don't have a lot of open space. And we'll see a great example on that euro in just a moment or two here about traps as well. So stay tuned on that for more. So if we do go higher here, look for that trap. I won't be surprised, though, at all if this thing runs higher here, runs right to the round number up there, and then goes sideways, right? We may end up seeing it tomorrow morning by 9:30. This thing might be going sideways here. If it goes sideways, find your range support. Again, size of the range, size of the first support level. Get that pullback. Let those bears try, right, and buy right into their failure. We look for failure patterns a lot in our trade room because it's an easy way to buy low, and there's no easier money than buying into the exits, right, of the opposite side of the market. All right, so keep your eyes open here for a range-bound market here because unless we get a deep pullback, the market has to kind of catch up to where we are here right now. Now, how about a bear market, right? How would we sell this thing? I mean, very rarely would I say this, but tomorrow's a day where you've really got to be, you could have a really darn good reason to be selling this market right now. The only selling you want to do in this market right now is going to be taking your profit right off a long trade. Not a very easy market right now to want to sell, especially since we really haven't achieved what I think a lot of people are going to consider to be the major objective, that round number at 2,800. Now, what would a reversal look like? Well, a 1, 2, 3 reversal, right? So, of course, it's a strong move down. This chart looks so funny because there's nothing there, right? Strong move down, a pullback to the moving average, and then this is where you got to see it. You got to see a strong move off the moving average. You've got to get that strong move off the moving average, or else nobody will trust it, right? Because again, people like me will be buying. I'll be buying right into that failure right there. So it's very, very important we wait, get that actual third step of that 1, 2, 3 reversal, then mark up those lows, mark up that new channel, and then we're looking to sell the high of that channel. I will be very, very surprised if tomorrow turns bearish. Let's put it that way. But hey, who knows, right? Who knows? Maybe Beijing comes back and says, wait a second, we were wrong. No more stimulus. That would probably cause this market to turn, I would imagine. Something tells me we're not going to see that headline tomorrow when we wake up tomorrow morning for the trading session. So now you know the plan there on the S&P. Now, before we go to the Nasdaq, though, I want you to notice, right, the S&P has room to go here right now. Okay, make note of that. Let's keep going. Over on the Nasdaq. The Nasdaq, as you can see here, we are right at that big round number right now. So the S&P has some space to go, which means, yeah, we do have the ability. It's not a great trade, but on the S&P, you could get long up top there if you had the right patterns, right? If you had the right entry pattern, right? That two-try trap low that I mentioned earlier. Here in the Nasdaq right now, we have to assume we're right there. We're right knocking on the front door now of that major objective. Now, it doesn't change very much. But the one difference, though, is I've really got to see a strong break higher here if I want to have any confidence to be a buyer on this NASDAQ. S&P had room to breathe. NASDAQ really does not. Now, much like the S&P 500, the NASDAQ is bullish. We went a long distance in today's trading session. Anytime we have that much movement in one session, the next day will probably go sideways. So keep your eyes open here now for a trading range. And then with that trading range, right, mark up your level of support. Use that 1-2 try failure. Again, learn more about that inside that free course below the video or in the upper right-hand corner, right? 1 try, 2 try, 1 try, 2 try, and we're buying back up, right, into that trading range. Okay, also, if we go sideways here tomorrow, we get that 1-2 back up, look for that 1-2 above that high, right? That's another option too. I can use the 2 try failure to buy off that low. I can also use that 2 try failure, right, to buy up through a breakout. Now you'll notice I don't just buy the breakout, because when the market goes sideways, especially after a day like today, oftentimes you'll see that market, they'll go up, it'll crash right back down in again. So I'm definitely not trying to buy the breakout. What I am going to do, though, is watch those bears to sell it, watch them try again, and then once I see that 2 try, then I know I can buy into those stops. Now, remember, you always have to know, though, where your objective is. Okay, the objective is up right above us here at 72.40. Look left, you can see there's that major high, right, from all the way back at the beginning of this month. It seems like forever ago, right? But this major level of resistance is no joke. That's going to be a major target for those buyers. If we can get through this 7,200, right? If we can get through it and run, again, much like over on the S&P, if we don't go sideways, if we just run and run, look for that trap, right? I don't want to buy high, so watch those traps, right, as we go. If you want to buy high, do it with a trap pattern, right? A trap pattern is one of my favorite entries when we're running out of open space. If we see a sideways market, right? If we end up going sideways here, if we start going sideways, you guessed it, 1-2, buying back up, right? Or 1-2, buying the breakthrough. One more clue here, very similar to the S&P, spike and channel, right? Strong spike up into a spike in channel. What do? We look for that deep pullback. Pullback where? Pullback into that base of the channel. I've got a reversal line there at 36.5, right? We get some pullback area there. This is ideal, right? This is ideal. I'll be surprised if we get this. The market is so bullish right now, riding on the back of that Chinese stimulus, that we may not get the pullback. We'll probably get a range. If we do get a pullback here, it's such a deep pullback that I'll look for what I call a 2-legged pullback, a 1-2. Draw the trend line down, and I can look for that 2-legged pullback to buy, right, off of that low. So a very easy pattern if we get a deep pullback. Deep pullbacks, which this would be, almost always give us some sort of trend line coming down. We can use that trend line now to buy on the top of that, right? To, instead of resistance, to use it as support, right? We call these two-legged pullbacks. So a little bit different than a typical pullback pattern, which we can definitely use, by the way, right? If we do see that two-legged pullback, right, we'll use two-legged pullback. But if we just simply see the market pull back here, we go back to the moving average, the sellers try to sell the pullback. What do? They fail, right? We can buy that, right? Buy that failure, buy the pullback, and buy the retest of that high, right? Easy, easy, easy. Easy pattern, right, on a relatively shallow pullback. And you'll notice I'm kind of using this little midline here to find that area of support. Okay, whenever we have a big channel like that, possible midline is always on our radar. But again, if we do see that big pullback though, right, if it goes 1, 2, now try to use that trend line. That trend line will usually be your best option on that deep pullback. So very similar between the Nasdaq and the S&P. The big difference though is the S&P still has some room to breathe. The Nasdaq definitely does not. I've got everything covered there now on the Eminis. All we need is a little bit more information. How about some gold right now? Now, of course, the first thing I always ask myself is, are we dealing with a range or are we dealing with a trend? And as you can see right now, there are a lot of conflicting signals on this gold market. Right? Kind of follow the bouncing ball right now. We started off here with a nice strong bull trend to finish off last week, and what happened? We went into a trading range. Now, what does a trading range tell me to do? You guys are experts in this now, right? Double top, what do? We find that level of support. Look where that level of support is. Look where we are right now. Right, we're right there. We're knocking right on that level of support. So now what do I want to do now? Right? I want to use this trend line now coming down, deep pullback, get above it, and go. The problem is that we've got one heck of a move lower here. That's a pretty obvious bear market. No doubt about it. What does a bear market tell us? It tells us that sellers are likely going to be trying to sell high. So knowing that we have this prior trading range, knowing that if I take that trading range and bring it down, we are right there right now. Knowing that's the case, right? I'm looking for a long side here. I want to be a buyer here right now, right, on this gold. But the problem though is I've got this bearishness, right? That bearishness coming down right now tells me I've got to expect to have a lot of sellers waiting overhead to sell this thing back down again. So I'm thinking let's get ready for both sides of this market, right? Buying or selling, right? On one side of it, I want to be ready for the buy going back up to that big round number. On the other side of it though, I want to get ready for a sell to go back down to where we came from. Remember, this whole move was off Friday's non-farm payroll. This could easily collapse here and run right back down to where the day began on Friday morning, right? Big range down there. So quite a lot going on here, right, on this gold. Most important thing is, which came first? Which came first? The bulls came first. So the bulls are still waiting here now to get their objective met. The bears now have to beat those bulls if they want any shot for a move going lower, right? Who came first, the bulls or the bears? That's a really, really big important part of this analysis. Since those bulls came first, we have to assume now the bears' job now is to take it away from the bulls. So let's plan the buy side first. How could I be a buyer in this market right now with all of this bearishness, right, as we see it? I'm going to clean this chart a little bit here. That way it's cleaner for you here. You know the basic ideas, though, on this chart, right? How can I buy this? Well, first of all, I've got this little short-term trading range here. Bear market into a trading range tells me use that trading range to find support and use it now to find resistance. So these levels of support and resistance now are extremely important. If I get the market to go lower, it'll go down into that support level. The market is bearish, so I can't just easily be a buyer on it. What I'm looking for is I'm looking for a very specific type of failure pattern called a nested to try. Because the market is so darn bearish, I've got to let the bears try once. I've got to let them try twice. I'm looking to draw a trend line off of that low and be a buyer off support. Let those bears try once. Let those bears try twice. Find that level of support and be a buyer off support. Now, sometimes this two-try nested failure sometimes does this. We go strong move down. We come back to the moving average. We fail and we run, right? We run. If it never pulls back to that support level, the next best thing now is to find a trap. Find that swing and look for your traps. Now, this trap may come at a higher price, but the bottom line is try to buy off a trap. If you can't get in, right? If you can't get in, again, the ideal scenario is we go down, the bears, of course, come in. They try to sell off the moving average. You don't want to sell below the range, right? You want to buy below that range. Let them try once. Let it go up, right? Draw in that new trend line. Now you got our support level here and find that level of support, right, to get long off that level of support. If we don't get that deep pullback, right, if it doesn't pull back to that low, now look for a trap. And again, don't take this price too literally with this illustration. Just think about if we don't get that deep pullback and this market starts running hard here, right? Look to stay patient and buy the pullback using a trap low. Okay, that'll be good enough. At that point now, momentum will have switched and we'll be off the races to be a buyer. So that's if the market goes lower. What if the market goes higher? If we go higher, this should be relatively the easier of the two patterns. If we go higher here, I'm looking for that same basic breakaway pattern I was talking about earlier, which is the 1, the 2, and the buy from there. It starts off with a strong break higher. Follow that up by a 1 try for the bears, a 2 try for the bears, and then we're buying literally right into those stops, right? Buying right into those stops for a rally going back up to retest that high. It's a similar pattern, right? Just a little bit different. Okay, so again, we go down, we go 1, we go 2 and up. Okay, let those bears try once, let them try twice and back up. If we go higher, strong move up, bears try once, bears try twice, right? And we're selling into their failure. It's a bear market. So we have to give the buyers, right? We have to give the sellers the benefit of the doubt. Now, how do we sell this market? Selling this market now is also relatively easy, but here we need to see a very specific pattern. Again, we've got that momentum going lower here, so we know the odds are, at least for now, on our side. I'm looking for a classic pattern with a 1, 2 try failure. Right? I want to see a 2 try. I want to see it go up. I want to see those buyers sort of buy the pullback. And I want to see those buyers start to struggle. I'm looking to sell right into those stops. Then, of course, into a pullback to finish off the move back down. A 2 try failure, right? Into a breakout pullback as we go lower. Now, remember though, right? If we see the market jump up, go 1 and go 2, right? That's the clue to be a buyer here. So I'm not looking for as strong of a jump, right? If this thing just jumps higher, you already know we're going to probably go long, right? But if it runs up, buyers sort of buy the pullback here, right? They can't buy the pullback, they fail. We're selling into those failures using that 1, 2 try failure pattern. And again, guys, I've got hundreds of examples of this pattern alone, right? Inside that free course, it's linked up in the upper right-hand corner or right up above or below the video tonight on our trading blog. Now, what about going lower here? How do we sell down here? We can, but we really don't want to. We want to wait for those buyers now to try once, try twice, look for a trap high, and sell from there. Let those buyers try once, let them try twice, then we can sell with that trap pattern. I don't want to sell low, I want to sell high. And I need to give those buyers a chance here to try to send this thing back into that range. Once they try twice, then I can sell right up around those levels of resistance, trap high, 2 try failure, and again, the objective now is to go back down and retest that low, right? Back down into that trading range around that 1286 area. So again, I like the upside. I really like the buy side right now. I think we're right on that level of support, right off of that trading range. But again, because we are so bearish right now, I've got to think now, let them try once, let them try twice, then we look for that buy going up. Or we finish off the move 1, 2, and then back up. Okay? Or again, up once, twice, fail back down, 1 try, 2 try, and keep going back down to retest that low. Guys, I know I'm covering a lot here right now, but not to worry. I teach and trade this with all of our clients every morning in our trade room, so don't forget to come out and join me there tomorrow morning at 8 o'clock Eastern time. And of course, wrapping things up here right now over on the Euro. How can we forget about that? Euro. Please don't forget, we are looking at rollover on the 15th of the month this month, right? The 15th of the month for rollover on the Euro. Okay, we'll probably be either on Friday or the following Monday this week. Right, so probably not going to be too soon this week, but keep your eyes open, though, for the 15th later on this week, right? 15th is Friday, so of course, right, keep your eyes open for that rollover as we go. As I am recording this right now, the rollover is getting closer here on the Euro. You can see the comparison between the 319 and that 619. We're pretty close right there. That volume is pretty close here. Once the 619 contract has more volume than the 319 contract, that's when you know it's time to trade that Euro 619. So be aware of that. We are watching contract rollover here on that Euro. First things first, what type of market conditions are we dealing with right now? Is it a range or a trend? Yeah, this is definitely a range-bound market. I can see lower highs. I can see higher lows. I can see flattening moving averages. Doesn't look like a strong trend to me, but is there directional bias to it? There definitely is. There definitely is a bullish bias to this market before we into that trading range. So that's pretty obvious, right? So bull market into a trading range. What does that tell us to do? It tells me to take that trading range, bring it down. That will give me levels of support. Bring it up. That'll give me levels of resistance. It's a bull market, so the best way for me to trade this market right now would be to get that pullback. Let's get this out of the way here so it's nice and clean there for us, right? The best way to buy this market right now would be to get a pullback, let those sellers try to sell into that moving average, and then look to buy right into their failure. Now, as far as the pullback pattern goes, the pullback pattern may not be a very good fit for this, right, for this chart, because you got that trend line coming down. That trend line here is going to be a real big challenge, right? So what do you think the best way to do that one is? Well, I wouldn't recommend buying that right into that trend line here. You can get it long as you get the pullback. But then from there, though, it'll be that up, strong move up, 1, 2, and we're buying from there, right? Let those sellers try twice, right, and buy from there. So that's going to be another way we can buy this market as we go higher. Just make sure, though, you don't buy into that resistance trend line. And then again, as we go higher, don't try to buy the breakout, because breakouts almost always fail. So give them 2 tries and then buy through that break higher once we see those sellers try and fail a second time. All right, guys, so that's the plan on the Euro if we get that, right, the pullback, or as we go higher here. So really at this point, it's really all a waiting game right now here on the Euro. I want to stay away from the middle, try to get below the range, let those bears try once, let them try twice. If we can get lucky, again, we'll try to get that pullback here. I just don't think that pullback's going to be too easy to get right into that trend line there. But a 2-try failure, though, should be pretty easy to get. At least enough space there for a nice first target. If we run higher here, it's a 1, it's a 2, it's a buy from there, right? The 1, the 2, and the buy from there, right? A pretty easy strategy here on the Euro. Now, where's the next objective on this Euro? I would normally give you guys a measured move here, but honestly, the Euro has been so predictable lately. The next target's probably going to be back to that big round number at 13,000, right? The Euro has really warmed up to these big round numbers. 14, 13, and 12,000 have really been kind of the ping pong back and forth right now. We went down to that 12,000. At this point, if they can keep this party rolling, 13,000 looks to be the next objective. By the way, what would a reversal look like? A reversal would be the what? The 1, 2, 3. I have no problem being a seller here. I've just got to see that strong move down, that pull back to the moving average, that strong move through. Then I can go look for that new channel, and then we can look to sell right off that channel high. And again, the objective is to go back down and retest those lows. All right, guys. Boy, oh boy, oh boy, what a great lesson so far here tonight. And guys and gals, we are coming back here right first things first here tomorrow morning. And don't forget, tonight we covered all the best opportunities we're waiting for tomorrow. But tomorrow morning, 8 o'clock Eastern time, I'll be right there with you, elbow to elbow in our trade room, and I hope to see you there with me. Don't forget, guys, you can learn more about membership on our website here at schooloftrade.com. I got 3 levels of membership, our beginner, intermediate, and advanced classes. I've got a great free trial that includes a free pass. Come out and join us as a guest in our trade room as part of your free trading class. And of course, I got a toll-free phone number. I've got live support. There's easy ways to reach out and get more information if you need any help along the way. And as always, I'm wrapping up here for now. If I don't see you guys tomorrow morning at 8 o'clock Eastern time, get some rest tonight. I know that daylight savings time shift's going to catch up to us tomorrow and on Wednesday. And speaking of tomorrow morning, 8 o'clock Eastern time tomorrow. If not, same time, same place, tomorrow evening on this nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.